So good morning. My name is Abe Dyck. I'm the Head of Corporate Development and Investor Relations at Aduro Clean Technologies. Thank you for joining our presentation today. How many of you came here because you saw me at the opening this morning? So, half of you at least. So before I begin, I'll share our forward-looking statement. I will be making forward-looking statements in this presentation, but I direct you to our CDR and EDGAR filings and our website for more complete details. So what do we do at Aduro? We are a company that is developing new chemistry technologies, and we are primarily focused on how do we apply that knowledge to undervalued or low-valued materials. So we find that in different places. So we originally started at how to unlock the value of heavy bitumen in Alberta's oil sands areas, because as you know, most of that gets diluted down to the point where its viscosity allows for it to be transported to the Gulf. We then applied it to things like renewable oils, and that was really just in research being asked by a large ethanol producer, can you do something with this byproduct which we had, which is corn distiller's oil? That led to several learnings on how to quench or saturate a scissioned hydrocarbon. And then more recently, it was we've then looked at other materials, plastics and rubber and other more complex carbon molecules. So where are we at in our scale-up of those applications? So what you see on the top left is at pilot plant stage. So we've built a pre-pilot plant, and we're currently at a stage where we are building a scaled-up, fully continuous pilot plant. 10 kilograms an hour, still fairly small, but it allows for us to do all of the scale-up engineering work needed in order to move into a demonstration scale plant. If we take a look at the TAM, advanced chemical recycling of waste plastics, it's a large total addressable market, 120 billion. Next, you see the partial upgrading of heavy crude. So while we started off in this area, there hasn't been a market that says, hey, this is something we need to do right away. And also, let's be honest, if we're trying to speak to our investor base, that is less of a topic that they can associate with than the problem of waste plastics in our environment. And so when we did an RTO, this was a story that we could much more readily communicate to our investor base. But that's also a fairly large addressable market, 50 billion. This work on the renewable oils. So we began doing some of that early on, looking at how do we create pathways for sustainable aviation fuel from renewable oils. So this could be used cooking oil, could be soy, canola, etc. There's a lot of work that's already been done in that to create renewable diesel. So we're a bit of a laggard in that space, but we're pivoting that into renewable chemicals like BTX. So as we're doing more onshoring, some of these platform chemicals, they're starting to be a greater demand for those. So that'll be an area that we look to commercialize later on. And as I said, we did other research, so on rubber tire, so we've done some of that just at lab scale, but this will come later on. What I'm demonstrating here is that while we're doing this stuff on plastics, it's not our only use of this technology to commercialize. We see that as what's coming first, and we're moving quickly to try and get to the point where we've got revenue. So if you take a look at this technology and the technology landscape that is out there, we first have to take a look at how does it fit in comparison to other technologies. The incumbent technology is pyrolysis, or a thermolytic approach. So essentially just using heat, you heat it up in the absence of oxygen, and it breaks down these molecules. There are a lot of great companies that are doing really good work on this using variations of pyrolysis. So if it's Envale that's using microwave technologies, or if it's, and same with Resynergy, or Itero that is also using just a high heat, or Mura is also using water, but supercritical water. So all of them are doing some unique things with pyrolysis, but it's still at its core pyrolysis, and it has its economical and technical limitations as to what it can achieve in terms of product quality. We're on the other side where we're looking at a chemolysis type of approach. And as you see in the name, Hydrochemolytic Technology, hydro, meaning we use water in our process. Not a lot of water like Mura is doing, a small amount of water. Water plays a role in facilitating the chemistry of breaking that carbon-carbon bond.
Instead of heat.
Pardon me?
Instead of heat.
Not instead of heat, but as an assistant to heat. So for example, pyrolysis is up near 450 to anywhere up to 800 degrees, depending on what type of pyrolysis you're using. So variation heat, yes. So we're down at the lower temperature. So we're aiming at the below 420, below 400, depending on the composition of our plastic stream, right? So if we take a look at what is the markets of waste plastics, you take a look first at how much plastic is being produced and what type of plastics are being produced. So you've got 400 million tons of plastic that are produced annually. This was in 2022. If you take a look at the 2024 number, that moved to 413. So clearly there's a problem that's coming, well, we've seeing it already, but it continues to grow. So we're not reducing the amount of plastic that is produced. If anything, we're accelerating the amount of products that we are making out of plastics, right? Because the plastics have become cheaper and cheaper. And with the low cost of natural gas, more and more plastics are being produced. There's also been a huge buildup on infrastructure in Southeast Asia that produces really inexpensive plastic products. So on the recovery side, what you'll notice over there is that the recovery amount is only about 9%. So 9% of that total 400,000 tons is from recycled. So the feedstock there's not much that is being reused in the production annually. So if we take a breakdown of that, where's the plastic going if it's once it's produced? Only 9% is being recovered by mechanical recycling. Mechanical recycling is when you're just taking two like-type plastics, say polypropylene and polypropylene, you melt them together and reuse it as polypropylene. Or polyethylene as polyethylene, and reuse it as polyethylene. So it limits the amount that you could actually use for mechanical recycling. Because as plastics have advanced, they've become more complex. They have multi-layers in them. They have additives, colorants, all sorts of attributes that make them valuable that they are today. But that making them complex has also made it very difficult for them to become recycled. Only 1%, so out of all those companies you saw there, we're only addressing about 1% of that right now. And all of them are at a stage that is advanced from where we are. Or, like I say, Aduro is also at the stage where we are, where they're ready to go and build a demonstration plant. So as you can see, there's a significant opportunity to go and address that waste plastic stream. If you quickly have a look at where it goes, most of it's still going to landfill. And so if there's an opportunity actually, this is a mining conference and you're having a look at where does this resource go, well, we can actually reuse this resource. It's already been extracted, it's on the surface, why not actually just reuse it once it's on the surface? And a large portion of that is to have a look at how do we modify the way in which we are addressing blue bins. Blue bins currently, they have narrowed what plastics can actually go in there. And we need to have a look at how do we broaden that, because you can't recycle something if it never actually gets collected. If it only ends up in the wastebasket, it naturally will go to landfill. So what you're seeing globally is this adoption of extended producer responsibility frameworks, which are now shifting the responsibility from cities, towns, and municipalities, who have traditionally done the collection and also end-of-life management in landfills, and pushing that back onto the producers. And so as those producers start to have that financial responsibility, they're looking at, okay, maybe we should redesign how we're making packaging, make it out of a single monomer, or maybe there are better collection systems that need to be built. And so you're seeing much more of that EPR program frameworks being rolled out. And it's not a one-size-fits-all. There are different types of EPR programs that are being implemented. So where do we as a company now interact with that full value cycle? Certainly on the chemical manufacturing side, we've got 5 engagements. Some are public companies, some are private companies, but all are interested in what can new technologies do in order to go and recover the value of these molecules, these hydrocarbons. Certainly on the retailer side, so these are the CPGs. They're the ones who are ultimately responsible for making packaging that has recycled content in it. And Europe has a number of policy frameworks in place, which are PPRW, which is Plastic Packaging Waste Reduction Act, which requires them to have 30% recycled or renewable content in their packaging. And you saw that we're only recovering about 9%, and if that one small market is now needing 30% content in there, there's a huge demand to go and find solutions to recover more of these recycled molecules. Over there on the waste management side. So waste management industry is finding itself at a crossroads. Like they have traditionally said, hey, we are happy to go and collect this, we'll do some front-end pre-processing, but they have not been comfortable with dealing with chemicals or how to do chemistry at high temperature and pressures. So, but on the opposite side, petrochem industry, they're not really interested in dealing with waste, and that's a whole separate sector. So you're finding these two starting to convert, and some companies starting to find a middle ground, which is a new sector, new industry, and that's who we'd be interested in collaborating with. So our business model is to license, but we'll also build, own, and operate as we are doing this scale up. But a little bit more on that later on. Then, of course, up at the top is chemical recycling. So we're one of several companies that is starting to address this market, finding new technology approaches to use this resource. So a little bit about how we're designing this. So this is our pre-pilot pilot. It was meant just to go and flush out what are the kinetic engineering requirements. How do we model the or get the data for us to be able to go and scale this up? And then what happens when you're changing the feedstock? So if you're just taking polypropylene and putting it through, it's a very homogeneous material. What happens when you start adding other contaminants to it? It's all chemistry, and so those contaminants, the way that they behave under those conditions also needs to be known, or else those contaminants could also end up in your product stream. And of course, that's what we don't want, we want to avoid. So we're doing some work around recovering film and flexibles. Film and flexibles are those plastics that are currently not going to blue bin, but are the ones that really contaminate the environment. You're seeing those bags all over the place. So how do we now encourage those recycling centers to bring films and flexibles back into the recycling bin so that they can be recovered? Well, their pushback is, well, there isn't technology that can do that. But we're saying there is a chemical recycling technology that can start to address that problem. Refuse-derived fuel, this is where a lot of this material is now headed to, but it's only being valued at fuel value and at a discount. So essentially the value of the RDF is essentially paired with the value of the energetic value of coal. So it has a real limitation. So that disrupts the economics of trying to do a project. So we unlock that value by actually creating this naphtha product that is going, well, if I follow this process, in our reactor, we create a direct to naphtha or steam cracker product. And of course, that's really challenging because that industry wants to make sure you've got a really clean product stream. I guess the other thing I want to point out here is that we're doing limited front-end pre-treatment of the material. The value of our feedstock coming into our facility is also a large part of why the economics work. We are not trying to compete with pyrolysis technologies or mechanical recycling technologies who are increasingly starting to compete for that 9%, and therefore the value of their feedstock is going up. So if we can handle more of that contaminated stream, that means that we can get a cheaper feedstock accessible to us. So how do we do this? We first start off with technology evaluations through what we refer to as our customer engagement program. So we're a little bit late to the game, as we said. Like pyrolysis has been around for a long time, and so they've had a runway to go and get their technology commercialized. And so what we want to make sure is before these large players start to make capital investments on a technology that they then don't want to pivot away from, let's get them involved early on. And so we've got engagements with Shell through their Game Changer program and also with Total Energies. We're working hand in hand with them to identify, how dirty can the feedstock get to while still having a quality product that can go into their infrastructure. So the last thing you want is for a large naphtha cracker, a billion-dollar asset, to have product go into it that clogs it, that disrupts it, that essentially goes and creates downtime for them. they don't want that product going in there. So been working hand in hand with them on technology evaluations. Those are the two that we've announced publicly. There are several others that we've engaged with that want to remain confidential for various reasons. They may be exploring other opportunities or other technologies, but these are the two that we've shared publicly. So as I said, we start off with a technology evaluation, then we go into a collaboration. So with Total Energies, that's a collaboration. Maybe just move to that next slide. Where it is really their research and development team and our research and development team who are working hand in hand, looking at all the aspects of how the technology works and what is the product that is being produced and the value of that product and how does it fit into their infrastructure. And so if it fits into their infrastructure, it's a pretty good measure that it'll fit into other naphtha cracker infrastructure. And so that's a multi-year engagement. It's a paid engagement, so we still don't relinquish any rights to the IP. IP is completely owned by Aduro. They have some rights of, hey, if they'd like to advance, but it stays with us until such time as a future engagement. So where are we currently? I said that we are building this pilot plant. So it's our next generation process. Built the pre-pilot initially. It was a design on a process, and we learned a lot of things there. So that knowledge got put into what we're referring to as our next generation process. This is 10 kilograms an hour. Sounds small. It is quite small. So it's about a quarter ton a day. So we downscaled that because we wanted to accelerate. And the lab that we were working in allowed us to have a maximum of 240 kilograms. So that's one of the reasons why we downscaled. The other thing is that it allows us to save on CapEx and OpEx. So from here, we can actually scale up to our demonstration scale plant. The demonstration scale plant we have announced is at 8,000 tons a year. We'll probably move that up to around 10,000 as we're working through the economics of that. But at that scale, we're already going to start having revenue coming off of that process. So that 1 ton an hour, that's about 8,000 tons a year. We've started on the design work. We'll, in 2026, start doing on the work on the fabrication, build-up of that reactor and that whole reactor train. We're also doing work on identifying a site. So we recently announced that we're looking in Mexico, in Canada, and in Europe. And there are various reasons for that. Canada, because that's where we're located. Most of our staff is there. We can very quickly pivot and utilize the same staff. Mexico, just it's cheaper to do the work there, but also because they have a very good EPR environment, extended producer responsibility environment. Also very large population, so there's a lot of waste plastics that is available. And in Europe, of course, because policy frameworks there lend themselves to being very favorable to being able to scale up a technology. So the process after, or the stage after that is to go and build larger scale commercial plants. But even at this demonstration scale, as I said, we'll be generating revenue at that stage. So if we're just looking at 2025, where we're at and what we had committed to doing, building the NGP pilot plant, that's in its final stages of commissioning. Phase 2 started in October, and we'll be doing the rest of that till the end of the year. In January, we'll be running those trial runs, moving through the various stages of different types of feedstocks in collaboration with our collaboration partners, and then getting that data to demonstrate that the scale-up works. It'll also inform some of that demonstration scale plant design requirements. We've finished the site preparation for the pilot plant, of course. We also had to do an office expansion. So as the company is growing, bringing on more people, we need to expand. So we've brought in a new VP of Finance, a new VP of Engineering, also Chief Operating Officer this year. So significantly scaling up the leadership team within the team. And as I've already mentioned a couple of times, we're doing the design and engineering for the demonstration plant and this decision on the type of site for the demonstration plant. And we'll have more news on that between now and the end of the year, where the demonstration plant will go. And we'll also start ordering the equipment for those long lead items. One of our last press releases was related to doing testing on some of that equipment at commercial scale. So we've got some work that we're doing with Kroos Muffai and the people at Chill in the Netherlands on commercial scale extruders and using our specific process on those reactors. So maybe a little talking point on why we think that we can scale so quickly is because we're using equipment that is already scaled. So the extruders be an example. You've got extruders that are lab scale all the way to full commercial scale. They are already scaled up. So we just need to use that piece of equipment. That's the same with the distillation column. It's the same with the CHP. It's the same with every part of our process. It's about how do we put it together. And so that's why we have a lot of confidence that the scale up will be easily achievable. Now, anybody who has done scale up will also recognize that there's always things that happen, always hiccups that comes along the way. So this Friday will be our 1-year anniversary. So we listed on Nasdaq a year ago. And it's been quite a ride for us this year. Here the entire team came up to New York and we did the closing bell ceremony in January. Quite an exciting time for us. Why did we move up to Nasdaq? We are listed on the CSE and on Frankfurt and also on OTC. But we weren't getting a lot of volume. A lot of the story wasn't getting told too far. Also, there's limitations as to institutional investors and their ability to invest in us. So we moved up to Nasdaq. We entered into significant marketing campaigns. We go out and speak to large groups of people, maybe in some environments like this where it's not necessarily a fit, but we find our fit. So if you're already tired of or saturated with your minerals and mining investment, maybe this is an investment for you. So have a look at what we're doing at Aduro. So a little bit about our capital structure. 35 million fully diluted shares, large insider ownership, 38%. And that's original founders, friends and family. There are very few that have actually, well, the core team, nobody's sold off any of their shares. So everybody's in it for the long haul. We have some warrants that are still outstanding and options. That's primarily for some salaries and some of those raises that we did, options and warrants that were attached with them. And market capitalization. So we've increased this substantially. Our share price, if you look at our fact sheet there, we started off earlier this year at a price at around $5. I think we're at $14.90 today. Might be a little bit lower. Missed that one, yes. And we've got 15 million in cash at the moment. We did a successful raise in July, 9.2 million oversubscribed raise. So that's it. You guys have any questions? Shoot.
How much more money is it going to take to get to the commercial product?
A very good question. So we still need to go and build the demonstration plant. And so that'll be in 2026. Part of this 15 million is definitely going to go to that. So demonstration scale plant, we haven't said it publicly what that is, what kind of money that is going to require. And part of that is we're still walking through the engineering. We also have to identify where's the site. So site selection is a significant part of, okay, so for example, if we're in Europe, labor costs is different than they are in Mexico versus what they are in Ontario. So we're not committing to that at the moment, but we'll be sharing that in the near future. Yeah. Anybody else?
So your product, the way you generate income then is to sell that product back to the original manufacturer or new manufacturer making the exact same product.
Yeah, good question actually. Who we sell it to is actually the petrochemical industry. So the petchem industry produces naphtha, and then they put it through a naphtha cracker. From the naphtha cracker, you go and produce ethylenes and propylenes. So where we're targeting to sell our product to is a naphtha cracker range oil that can go to the naphtha cracker. And so that is the likes of the big petchems, Shell, Total, SABIC, Borealis, LYB, those guys. They're all the companies that are looking for this product. The reason they're looking for it is that those CPG companies, those companies that are making plastics, they're asking them, do you have renewable content that we can go and put into our product stream?
What is it? In the form of pellets or?
Our product is in the form of an oil. It's a liquid product. An oil. It's a liquid product. Yeah. Naphtha cracker oil.
Could you make paint with it?
We wouldn't directly make paint from it, but if it's going into the petchem industry. Yeah, think of it this way: the molecules, those hydrocarbon molecules, are indistinguishable from fossil molecules. Another good example is renewable energy industry, right? You can't distinguish a kilowatt or from renewable or fossil derived, right? Once it goes into the infrastructure, they are indistinguishable from one another. And that's one of those challenges that we have, is this recognition of mass balance. What is actually a renewable hydrocarbon molecule? And there are some frameworks that are starting to be recognized to say, okay, a ton of this material went into a process, it got converted, now it's these hydrocarbon molecules. Can you get recognized for these circular molecules? And that framework is starting to get mapped out. Yeah.
So what's the end game? You're obviously scaling up with your partners with Shell at a certain extent in total.
Yeah.
What about buyouts? I mean, what's the end game?
So we still need to valorize the technology fully. And so I'd say our end game would be a number of ways of finding customers. Licensing the technology. So this could be deployed in many different locations under different licenses. Pardon? Modular. It could be modular, or it could be that you build a larger build, own, and operate facility. So that's another option for us. We will build, own, and operate the demonstration scale plant, because in order to license, we need to first develop standard operating procedures. We need to demonstrate with long duration runs that the quality of product is sustainable, that we can warranty what's there. So only then will we fully realize the value of that license. And so post demonstration scale plant, we will be looking at licensing, or even build, own, and operate facilities.
You'll be making money at that point.
We will be making money once the demonstration plant is operational. That's where we see our first revenue. Yeah.
Because the product from the demonstration plant will go back into use or commercial use.
Exactly. So we will be working with those companies we listed, and whether it's Total and Shell, they're interested in testing this material at larger volumes. Like we've tested at lab, we've tested at slightly larger than lab, but they also have infrastructure at the commercial scale. But once we can't go and give them enough material right now, because we need to build our demo first. So then we'll have full ISO container volumes of material that we can send to them. They do the independent test. Right.
And what is the market price for such a product? Is it comparable with the original effluents from cracking?
Yeah, that's a good question, because so our target is to try and find a market that does not require incentives. But the reality is that there are incentives now, and they are market.
You have the $60 a barrel price.
Yeah.
And derived from that, you get the price for
Yeah.
the work.
Yeah.
You get the price for the plastic or whatever comes out of it.
Yeah. So the market price of fossil-derived naphtha is around $900 a ton at the moment, right? So we can produce and be profitable with that kind of margin. But it also depends on how clean is that feedstock, or how much am I paying for that feedstock, right? So if I'm paying $350 for that feedstock, well, then I have a very small operating margin in there, right? And this is one of the reasons why these other companies are having some difficulty. It's that margin spread is quite tight at the moment. Now,
Take into account, like, for example, there's a lot of fuss about PFAS,
yeah.
which
So-
is in plastic.
PFAS is in plastic, and I think that if you actually bring plastics into a chemical process, you're actually dealing with the PFAS. That being said, we haven't done any specific study to see what happens to PFAS in our process. It's something that we will do later on. It's something that we will do with these clients, these customers, to go and address it. It hasn't been on our critical path. But I want to just stress that a little bit further around, I said it's $900 a ton. That's for fossil naphtha. The market price for circular naphtha is up to $1,600 a ton. And the reason for that is there's a significant supply-demand delta. As I was saying, that in Europe, they're required to go and have 30% content. but they can't find 30% content, so there's a shortage. And because of that shortage, there's a premium. The other thing that makes our process better is that when you are doing pyrolysis processing, you are creating a pyrolysis oil. That pyrolysis oil is highly contaminated, I'll put it that way. They still need to go and put it through another process referred to as hydrotreating. That hydrotreating process is about $400 a ton. And so what we're targeting at doing is bypassing the hydrotreating process, meaning that we're creating a quality naphtha oil that can go into that naphtha cracker, not having to go into the hydrotreater first.
That much cheaper.
Yeah.
How do you do that? Is it by filtering or is it inherent?
No, it's inherent in the actual chemistry, right? So I didn't go into too much, but so what we're using is a catalyst. Catalyst also helps to drive down the heat requirement. We're using a lower heat, and we're using some water, and we're using something we refer to as an H source. So the H source can come from a number of different places, but the initial place that we found this H source was from the renewable fuels projects that we're doing. So glycerin, the role that glycerin has, and if there are chemists in the room, then I'm not a chemist, but you'll know that there are a lot of H's, hydrogens, in glycerin. And so what we're doing essentially is borrowing those H's in order to saturate a scissioned hydrocarbon. So you cut the hydrocarbon apart, you just leave it. What it wants to naturally do is come back together. But if you stick a hydrogen in between it, it stays separated, right? And so that was our original learning. But where you can find it in other places, so you can find it in ethylene glycol from PET. So in our process, we use a little bit of water, right? So you hydrolyze the PET first. By hydrolyzing the PET, you're separating out the PE and the terephthalate. Terephthalate comes out, and we use the ethylene glycol in order to saturate the scissioned hydrocarbon. And it's in this chemistry that makes us unique from pyrolysis. And go ahead.
So how much more inexpensive is your process versus the other per ton? What do you think of that?
Yeah, and so it depends on, there were a whole list of them there, so which ones are there? There was in one of my earlier slides, I was showing how many other technologies there were. Right, so we haven't done anything in which we have said publicly what our OPEX cost is. And that, of course, that's because we want to be cautious at what stage we're at. We're building the pilot plant. We've got the demonstration plant after that. If there's some things that are unknown, we will still discover those. But from all the things that I've pointed out, you know, we've got a cheaper feedstock. We're using less energy. We are producing a better quality product that is commanding a higher price. Those are all indicators. Plus, we have things like, you know, carbon offset. Because we're doing this, there's a revenue stream that can come in from that. We have a lower LCA. So there are a number of things that are pointing to us having something that's really incredible. So that's why we want to be cautious. You know, as we scale, we'll share more of that as we, you know, do the, you know, the actual independent studies on the scaled-up version. We're trying as fast as we can. You saw the map. Sorry, go ahead.
So as you scale up, would this be directed to governments? I mean, it's cleaning the environment, right? I mean, it takes a lot of money too to scale up, and they're the ones who have the money, right?
Well, as it turns out, there's a framework that's starting to become adopted globally. It's extended producer responsibility. So traditionally, it has been governments, right, through cities, towns, and municipalities.
Educate.
Well, the cities, towns, and municipalities, they were the ones who had to collect all the wet garbage at the beginning, right? Earlier on, recycling programs worked because you had simple plastics and you could just go and melt them together. As plastics became more complex, fewer and fewer of those plastics ended up as mechanical recycling. And so therefore, the revenue streams for cities, towns, and municipalities began to shrink as well. And they haven't...
Less of my stuff in the recycling bin. I mean,
They take less and less all the time, right? Yeah.
Glass the other day.
Yeah, and it's because they haven't got any money, and they haven't had any money to do the research to say, okay, what can we do with this complex material that we're now receiving? And so what extended producer responsibility frameworks are doing is reshifting the responsibility, at least the financial responsibility. And so you're getting these nonprofit entities that are set up, that are funded by those who are providing the packaging in that economy. So I'll take the example in Ontario. We have an organization referred to, well, first move it up to the government level. At the government level, they created the RPRA, Resource Productivity and Recovery Act. or authority rather. So in that authority, what it said is that cities, towns, and municipalities, you no longer have the responsibility to go and pick up any of your waste material. It'll be the producers. And so RPRA then set up this nonprofit that is managed by Circular Materials. So Circular Materials sets up the framework. They're spending about $1 billion to set up recovery centers. So that means that instead of diverting into landfill, it's coming into a recovery center. At the recovery center, they're separating out those things that are easily recoverable: metals, glass, paper, plastics. And so there are some easier plastics like PET. PET has a really good, your water bottles, there's a really good path for recycling. Then they're taking the other mechanical recycling, so your rigid plastics, those are going to mechanical recycling. And then you still have this bucket that is difficult to recycle, and that's where chemical recycling will fit in. But essentially the cost of that operation is starting to get pushed back to those packaging producers. Yeah.
Do you have enough feedstocks without having to go into the landfill? Is there a way, are you concentrating on trying to go into the landfills? I mean, that would be a big deal, but I'm sure it's expensive and separate.
Yeah, for us right now, we haven't looked at that as, we're still scaling up, but I love that idea. Like if you think about, and we're also producing a product that is in the fuel range, right? The naphtha is essentially a fuel range liquid. You could see remote communities that would actually just use it as a fuel instead of as trying to find its path back to a naphtha cracker, right? So if you are looking at Indonesia, it's got 4,000 islands, and those islands, hey, they receive free plastic every day in the form of packaging, right? What happens to that plastic? At the same time, they have diesel-fueled power plants, right?
So you could make diesel from the naphtha?
You could see a pathway for that, a business model that does that, yeah. Because the diesel fuel for those kind of facilities is actually quite expensive. The volume is small because it's a small island, but the transportation to get it there, right? So, yeah, there are a number of opportunities, I think, that if we, once we get to a commercialized scale, I think the other thing I didn't really mention is that we're looking to create a smaller minimal viable size, right? So and the reason for that is that if you're picking up plastic from a very large radius, right, to feed a plant that requires 100,000 tons, that means you're transporting it from a larger and larger area, right? So that cost to transport, the carbon footprint, the fuel cost, the labor cost, you start to get a very expensive feedstock. But if you're able to go and move it into the phase where it's a liquid, you can transport liquid fairly efficiently, right? Yeah.
And scale to community.
Scale to the community, exactly, yeah.
And we're at a mining conference, and a lot of people talk that
Yeah.
landfills are potentially the future mines. We'll be mining the landfills and
Yeah.
are here for this,
Yeah.
potentially.
As well, prior to this, I was in the biofuels industry. It's actually how I got connected with the founders. If you take a look at used cooking oil, it wasn't that long ago that restaurants paid to get rid of that material, right? And they paid a lot for it. Then it transitions like, okay, it's something that somebody wanted, and then okay, we don't pay to get rid of it. Somebody's going to come and pick it up. Then it got to the point where you had essentially dumpster divers, people who were in the middle of the night going out collecting this used cooking oil because it suddenly had value. And I think that's where we need to think of plastics. Currently, we haven't valorized it. We haven't seen it as being valuable. And I think that, whether it's in the landfill or if it's being diverted from landfill, we'll soon get to the point where we're saying, hey, this is a resource, we can actually use it and valorize it. Yeah.
There is also a lot of burning of
Yes.
plastics. Like in Belgium, we have a big, ADUR is one company, maybe you know, it's a
Yep.
company. It's in the entire Europe, that they really burn the plastics and
Yep.
they convert the calories or the juice
Yep.
into electricity.
Yeah. And so,
That's maybe a competitive.
in some sense it is, but in another isn't, because there are, like we're dealing with polyolefin fraction. It's about 70% of the plastic stream. But like if you've got such a mixed stream that the only path is for you to go and gasify it and still recover those molecules in the form of a syngas that you can convert into an energy. So I don't deride them for doing what they are doing. I think the legacy waste to energy plants, they still have quite a bit they have a large carbon footprint, and they're spewing stuff into the atmosphere that may not be good for the environment. So Will they pivot? I think that Indivir is actually pivoting. They have their own waste to fuels, or waste to,
Yeah, they just started the plant in.
yeah, yeah.
What is your idea in your business plan for getting cash flow positive?
Cash flow positive, you're right. So we are still at a stage where we're pre-revenue. Not completely. We do get paid by some of these paid research collaborations, but it's nominal income. We're primarily interested in that collaboration and the value that we get out of the collaboration rather than revenue. So, but we are planning on the demonstration plant, which we are looking to have ready for commissioning at the end of next year. So target early 2027 as being revenue for the company. You know, and it's out of that 8,000, maybe it's 10,000, but we've publicly said 8,000 tons a year of material. Yeah.
And this pilot plant's in Ontario?
It's in Ontario, London, Ontario. Yeah. Yeah.
So this 8,000 tons, that would be at around 1,600 Canadian or US dollars per ton.
Sorry, say that again?
Your revenue would be
Yes.
8,000 tons times 1,600 US per ton.
So it can go up to 1,600. So if you want the maximum premium, we'll have to have set in place a couple of other things. There's ISCC Plus. This is a certification program, right? So once you've got all those programs in place, so ISCC Plus, what it does essentially is say, where did you get your material? What is the path that it followed? And so I don't think that for the demonstration plant, we will have completely implemented something like that. We'll start doing the work around mapping that out and looking at how to implement that. But for a commercial plant, definitely. So I think for the demonstration plant, we're primarily interested in, can we get revenue from those participants that are interested in testing it? Yeah. If that's everything, I think I'm well over my time, but thank you, everyone.
Thank you.